Hello everyone and welcome back to the channel. Today we're diving into Alphabet's latest financial results, specifically, their Q4 2024 earnings and overall performance for the year. Whether you're a seasoned investor or just someone curious about where Google and its parent company are headed next, stick around. We've got a lot to unpack, from AI breakthroughs in Google Cloud expansions to big wins for YouTube and, of course, some eye-opening numbers. Let's get right into it. Before we discuss the financials, let's talk about one of Alphabet's biggest drivers of growth this past year, artificial intelligence. Alphabet has made it crystal clear that AI is at the heart of everything they do. They're especially proud of their Gemini models, which they say are integrated into all of their major products, Search, YouTube, Google Cloud, and beyond. Why is Gemini such a big deal? It's powering new AI overviews in Google Search, making it easier for users to ask follow-up questions and explore topics in more depth. Younger users, in particular, are really embracing this AI-driven approach. They're spending more time asking more detailed questions, which translates into more user engagement. Features like Circle to Search are starting to take off, accounting for over 10% of searches among those who've tried it. The bottom line? AI is boosting user satisfaction and driving higher usage, which could translate to long-term revenue growth as these features mature. Now, let's get to those all-important numbers. Alphabet's total revenues for 2024 hit an impressive $350 billion, up about 14% from the previous year. That's no small feat given the challenges in the macro environment. Operating income rose to $112 billion, marking a significant jump of around 33% from last year. This indicates that even as they're investing heavily in AI, they're still managing to boost profitability. Q4 2024 revenues came in at $96.5 billion, well above the $86.3 billion from Q4 2023. YouTube had a solid quarter for ad revenue, with brand and direct response ads contributing to notable growth. Geographic breakdown. The United States is still Alphabet's largest revenue source, followed by EMEA, Europe, the Middle East, and Africa. Every region posted year-over-year growth. All in all, it's a strong performance across the board, and the company is showing no signs of slowing down. Let's pivot to Google Cloud, which is shaping up to be one of Alphabet's key long-term growth engines. In 2024, cloud revenues jumped to $43.2 billion, with nearly $12 billion coming in during Q4 alone. Why the huge surge? Enterprises around the world are snapping up Google's AI-powered cloud solutions. They see it as a way to gain a competitive edge, whether it's leveraging machine learning for data analytics or building new AI-driven applications. Deals over $250 million doubled this year, and the number of first-time cloud commitments more than doubled compared to 2023. However, Alphabet mentioned they ran into capacity constraints in Q4 due to high demand for AI products. To tackle this, they're stepping up capital expenditures, CapEx, to ramp up server capacity and data center infrastructure. The good news is that Alphabet can shuffle capacity between its Google services, like Search and YouTube, and Google Cloud, which helps them manage resources efficiently. Despite the big investments in AI, Alphabet isn't just spending for spending's sake. They're laser-focused on cost efficiency. Operational efficiency. They're using AI internally to optimize workflows, automate coding tasks, and streamline various processes. Data center innovations. Alphabet often designs and builds its own data centers to be power efficient and cost-effective. That helps them scale quickly without breaking the bank. TPUs, tensor processing units. These custom chips give Google's AI workloads a major performance boost while also making the most of every dollar spent on hardware. In terms of return on invested capital, Alphabet has a rigorous internal review process. They're betting on AI and data centers, but they also want to ensure these investments pay off by bringing in higher revenue from cloud and other AI-driven services. We can't talk about Alphabet without talking about YouTube. It's still a powerhouse platform with robust ad revenue, especially from brand advertisers looking to reach big audiences. The company's short-form content feature, Shorts, has been a strong engagement driver. Creator ecosystem. Over 3 million channels are in the YouTube Partner Program. That means creators are getting paid, and YouTube is nurturing its community to keep fresh, compelling content rolling in. Living room watch time. People are watching more YouTube on TV screens, which is an increasingly important part of YouTube's monetization strategy. This all adds up to a healthy pipeline for ad revenue and a platform that remains competitive against other video and streaming services. Challenges and risks. Of course, it's not all smooth sailing. Alphabet does face some challenges. 1. Regulatory scrutiny. The U.S. Department of Justice and various states are pursuing antitrust lawsuits. A district court ruling stated Google violated certain antitrust laws related to search. These legal battles could lead to hefty fines or force changes in how Google operates search, Android, or even its advertising business. 2. Capacity constraints. As we mentioned, demand for AI products is outpacing supply, at least in the short term. 3. Competition. Rival tech companies, like DeepSeek in AI development, are making strides, which keeps Alphabet on its toes. 4. Supply chain and market risks. Fluctuations in currency exchange rates, interest rates, and general market volatility could all impact Alphabet's bottom line. 5. Trademark and IP issues. They face ongoing challenges to protect the Google trademark and stave off intellectual property disputes. Despite these headwinds, Alphabet remains confident in its long-term strategy, banking on continued AI innovation and strong user adoption across its ecosystem. So, where does Alphabet go from here? The company is crystal clear about AI being its future, whether it's improving search, boosting cloud services, or opening new consumer-friendly avenues with features like AI-driven assistants. They're also pushing into quantum computing, codenamed Willow, which could someday revolutionize entire industries. Financially, they're not just hoarding cash. They've been repurchasing shares and even initiated a dividend program in 2024, signaling confidence in their cash flow and overall financial health. Key takeaway. Alphabet is firing on all cylinders: search, YouTube, cloud, AI, but is also staying vigilant about efficiency and potential legal or regulatory hurdles. If they keep executing on AI and manage those risks well, Alphabet is positioned for a strong future. And that's the big picture for Alphabet's Q4 2024 earnings and the road ahead. We've seen solid revenue growth, major AI advancements, and exciting developments in cloud and YouTube, all backed by a commitment to cost efficiency and innovation. Of course, regulatory challenges and competition remain significant, but if Alphabet continues delivering on AI and user-friendly experiences, we might just see even bigger things in the years to come. I am not a financial advisor. Everything here is for informational and entertainment purposes only. Always do your own research or consult a professional before making any financial decisions. What do you think about Alphabet's latest moves? Is AI really going to be the game changer they predict, or do you see challenges on the horizon? Let me know in the comments below. If you found this breakdown helpful, be sure to hit the like button and subscribe for more finance insights. Thanks for watching, and I'll catch you in the next one.